Bitcoin could hit $250,000? Multiple analysts are saying huge things are coming. Find out why they're so bullish, even with recent market dips. Plus, learn about a free tool to optimize your trading strategies and a surprising report on crypto adoption. In the latest video from Altcoin Daily, Brian Armstrong, Coinbase CEO, discusses the ballooning U.S. and global debt, suggesting Bitcoin could become the world's reserve currency if the debt issue isn't resolved. He believes that buying Bitcoin is a good strategy in this situation and points out that Bitcoin's price rise correlates with increasing U.S. debt. He also mentions that according to JP Morgan research, retail investors are looking for the next catalyst in Bitcoin. The video also includes insights from Swan Bitcoin's chief investment officer, who is optimistic about Bitcoin's future, predicting it could reach prices between $225,000 and $250,000. He explains that corporations are increasingly adopting Bitcoin as a long-term asset, further driving demand. Armstrong emphasizes that democracies worldwide are struggling to control deficit spending, and he hopes the U.S. government will address this. However, he remains bullish on Bitcoin's future, viewing the current market dip as a buying opportunity. It's interesting how Armstrong frames Bitcoin as a potential solution to the debt crisis. While the idea of a decentralized reserve currency is appealing to some, it's important to remember that Bitcoin's volatility could also pose risks. Recent news about increased regulatory scrutiny of cryptocurrencies also adds another layer to the discussion. The increasing institutional interest in Bitcoin is undeniable, but it's still too early to tell if it will truly become a widespread reserve currency. The global economic landscape is complex, and factors beyond debt, such as geopolitical events and technological advancements, could also play a significant role in shaping the future of finance. In the latest video from Crypto Rover, Bitcoin forms an inverse head and shoulders pattern, hinting at a potential price target of $160,000. A CME gap also suggests upward movement, with $120 million in short liquidations possible if Bitcoin reaches $111,000. The Federal Reserve's rate hike decision next week is anticipated to maintain current rates, with cuts projected for September 2025. The M2 money supply increase could further boost Bitcoin's price up to $140,000. Ethereum, ETH, remains in consolidation, but a breakout above $2,600 could propel it to $4,000. Crypto Rover has opened large trades on ETH, confident in its potential. The projected Bitcoin price target of $160,000 is certainly exciting, and the technical analysis presented in the video seems sound. However, the crypto market is notoriously volatile, and external factors like regulatory changes or macroeconomic shifts could easily disrupt these predictions. It's interesting that Crypto Rover is focusing on ETH, particularly with the anticipation of a breakout. This suggests a potential for greater returns in ETH compared to Bitcoin in the short term, aligning with the current market sentiment where many analysts see ETH as undervalued. While the M2 money supply correlation is intriguing, it's not a foolproof indicator. Ultimately, the markets will decide. In the latest video from Lark Davis, he challenges common financial narratives, arguing that rising rates, job market concerns, and consumer debt fears are overblown. He points out that markets have performed well despite higher rates, and the 10-year Treasury yield remains within a reasonable range. He cites current unemployment rates, around 4.2%, and points out job openings are up. Davis debunks the idea of a struggling U.S. consumer, citing JP Morgan data showing consumer spending growth, especially among Gen Z and millennials. He discusses inflation, noting the current 2.4% CPI is manageable. He says the S&P 500 touched 6,147 and Bitcoin broke $111,000 last month. I looked at recent news and it seems Davis's points about a strong economy are generally supported by data, although some sources show different perspectives on consumer spending. The Atlanta Fed's GDP growth prediction is indeed a positive sign. However, the situation with tariffs could shift the landscape quickly, and it's something to watch closely. In the latest video from Ben Cowan, he discusses the altcoin market's performance against Bitcoin. He points out that altcoins have reached a ratio of 32 on their Bitcoin pairs, a level predicted back in mid-June. Cowan attributes this to ongoing quantitative tightening QT and speculates that the Fed funds rate exceeding the neutral rate contributes to altcoins' decline against Bitcoin. He observes that historically, altcoin-Bitcoin pairs tend to bottom out around a ratio of 0.25. While the timing remains uncertain, Cowen suggests this level could be reached possibly even soon. He examines various altcoins, highlighting Link as an example of a coin potentially breaking down against Bitcoin. Cowen also discusses Bitcoin dominance, predicting it could reach 66%, driven by altcoins devaluation. He uses Solana as a case study, illustrating its similar pattern of bouncing at support levels and being rejected at the bull market support band. Cowen concludes that Bitcoin remains a better risk-adjusted return option, even though it might experience weakness in Q3. Cowen's analysis resonates with current market trends. Recent news articles highlight increasing Bitcoin dominance, echoing his prediction of a potential rise to 66%. The discussion around quantitative tightening and its impact on altcoins aligns with the current economic climate, making his observations timely and relevant. While the future remains uncertain, his analysis provides a valuable perspective on the ongoing dynamics between Bitcoin and altcoins. In the latest video from Coin Bureau, Guy summarizes Gemini's Global State of Crypto report. Crypto ownership is up in most surveyed countries since 2024, with the UK leading the pack and France also seeing huge growth. The report shows 24% of UK citizens and 21% of French citizens now own crypto. The report also mentions how President Trump's pro-crypto policies, especially the U.S. Strategic Bitcoin Reserve, increased confidence in crypto even among non-owners. Meme coins also act as a gateway to crypto, with 94% of meme coin holders owning other cryptos and 31% of U.S. crypto holders having started with a meme coin. ETFs are also very popular, being the fastest growing ETF type in history, with 39% of U.S. respondents investing in them. Bitcoin is also being seen less as a risky investment and more as a store of value. The report also touches on the gender and age demographics of crypto adoption, finding more women are getting into crypto and Gen Z millennials are the main holders. The shift in perception of Bitcoin as a store of value rather than a risky asset is interesting. It reflects the growing maturity of the crypto market. Recent news shows increased institutional interest in Bitcoin, and if this trend continues, it could further stabilize Bitcoin's price and drive broader adoption. In the latest video from Crypto's Russ, George answers viewer questions about Bitcoin profit-taking strategies, his involvement in consulting services for crypto projects, and the future of altcoins. He predicts Bitcoin could reach $200,000 to $250,000 by the end of 2025 and advises viewers to prepare for market fluctuations. He mentions that he will personally start taking profits when Bitcoin reaches $150,000, gradually increasing his cash position as the price rises. He also briefly discusses his limited involvement in advising crypto projects, stating he prefers to focus on content creation. Regarding altcoins, he believes the top 10 will likely perform well, potentially exceeding their previous highs, but is uncertain about the future of mid and small cap altcoins. It's interesting how George emphasizes the importance of having a cash position in such a volatile market as crypto. His approach to taking profits as Bitcoin rises makes sense. His predictions of a potential $200,000 to $250,000 Bitcoin by the end of next year echoes similar sentiments shared by other analysts in the space, primarily driven by the anticipation of increasing institutional investment. With the upcoming Bitcoin having an overall market sentiment, it's natural that these predictions are gaining traction. The uncertainty surrounding altcoins, especially those outside the top 10, is a concern shared by many. This is indeed a new sort of crypto cycle with lots of people on the sidelines. In the latest video from Crypto Banter, David shows a free Chrome extension tool called Optimizer that helps traders find the best settings for their TradingView strategies. It automates the tedious process of manually adjusting settings in the strategy tester, which can be very time-consuming. The Optimizer tests different combinations of settings and outputs the results, including an Excel spreadsheet. David also mentions the David Tech community on Discord, where users can share and collaborate on profitable setups. This type of automated backtesting tool seems quite useful for traders who rely on TradingView. It could save a lot of time and potentially improve results. It's interesting to see how communities are forming around algo trading and sharing knowledge like this. While the video focuses on one specific tool, it highlights a larger trend of using automation and collaborative learning in trading. I recently read an article about the growing popularity of algorithmic trading and how it's becoming more accessible to retail traders, and this tool seems to fit into that narrative.